I'm Michael Maloney, founder of Satellite Design for Recovery.
I'm Robbie Boundy, founder of Space Impulse.
I'm Alistair Funge, Space Policy and Operations Engineer.
And I listen to the Cold Star Project.
And I listen to the Cold Star Project.
And I listen to the Cold Star Project.
This show is for entertainment purposes only and is not what is termed professional advice. The Cold Star Project is proudly presented by the Operational Excellence Society. Cold Star Tech is a supporter of the OPEX Society, and Jason Kanigan is a member of its board of advisors. Talk with us at Cold Star Tech to find out what we can achieve together with your Lean Six Sigma or Operational Excellence programs. And check out opexsociety.org to learn more. Today's guest is a graduate of the U.S. Naval Academy. Can't be a bad guy, right? And spent about 20 years working as an analyst for a major investment firm before branching out onto his own. And he's regarded by folks, including me, as the leading Wall Street analyst on the space and satellite sector. Here's a guy who really understands business and technology, very important combination, and often missing out there. Usually it's one or the other. So Chris Quilty, welcome. All right, Chris. So you spent a very long time, 20 years, working as an analyst for a very well-known investment firm, and then you decided to open your own firm. So what changed there? What made you want to open up your own company?
Ignorance? I don't know. Well, actually, I have to say, when I left that investment firm, Raymond James, where I was a sell side analyst for 20 years, I actually thought for the first time in my life, I'd go out and get a real job instead of just pontificating about stuff, stocks. And I had a number of offers within the space industry. I had been writing about space stuff for 10 or 15 years, and I had some offers, CFO and biz dev and corp dev and strategy work. And then I had actually somebody in the industry who said to me, Chris, you're the only guy on Wall Street that's writing on the space industry. And, the stuff you write is kind of interesting. Like, why don't you just go out and do this on your own? And I thought, well, yeah, that's a real stupid idea. Because who's ever going to pay me to do this? And I had several other, customers and on the investment side and companies in the industry that, I kind of called around and said, hey, if I did this, would you be interested? And lo and behold, there was enough of a critical mass that I walked out on the plank, took a jump and said, I'm going to go create my own little boutique here and do research. And we've added on banking and some strategy work that we do on the industry. And, in retrospect, 2016 was a year after SpaceX and OneWeb had announced their LEO broadband constellations. And it was just on the leading edge of when, venture investing in space companies went from absolutely nothing to just skyrocketing. So, the rest is history. We've been busier than a one-arm wallpaper hanger here for a couple of years. The outlook for the industry is pretty exciting, and we in the heck out of what we do.
Awesome. Well, yeah, you were recommended to me by several people. You should talk to Chris Quilty. I think Michael Mealing might have been the most forefront of the badge. So, the space startup industry, here's my preamble for the next couple of questions here. It's filled with founders who have a technical idea. They want to make the thing, and they believe that alone makes them a business owner. Now I got a business, I got an idea. But who's the customer? You ask them this and they don't know. So I personally find this the most frustrating thing about the space industry. But in your LinkedIn profile, you talk about benchmarking. What indicators do you look for that demonstrate, hey, this company is going to be a good investment?
Yeah, and you bring up a fair point. I mean, this is a technical industry. It's populated with engineers, and engineers like building stuff, even if there isn't a business model behind it. I mean, I have had people that have come to me in the past and said, hey, we developed this thing, this widget. What's the market for it? And I thought, oh my God, who gave you money to build your widget? But I digress. So, yeah, when you benchmark, well, first of all, let me make a distinction between public companies and private companies. I did that for 20 years at Raymond James, picking stocks. We don't do that anymore. We do research, we do financial research on companies, and certainly that's our background. But there's lots of folks out there that want to call buy sell ratings on stocks, go to it. On the private side, that question, which is maybe more of a venture investor question, I think it all starts with, you mentioned it, who's the customer and what's their need? If you're not starting there, you're starting in the wrong place. If you can't identify somebody who is going to willingly buy whatever service or product you're going to create, then you've started down the wrong path. Beyond that, there's a lot of things like what's the competitive environment, what's the technical challenges, and end of the day, you got to sit down with a piece of paper and run the numbers on this. If you can achieve delivering that product or service, what's the return on your investment? What's your risk adjusted expected return on that investment? It's got to be a good business for you too, not only a product that makes sense for the customer.
Okay. Chris, how often are you asked by a private company owner to come in and look at their numbers as opposed to from the outside looking in? Because private companies are pretty notorious about not sharing information, right? You're just guessing a lot. So when we talk about benchmarking, we're not probably able to see cash on hand or something like that, right?
Yeah.
Are you mostly looking at the industry on behalf of investors and whole sectors, or are you looking at individual companies?
Yeah, I'd say it's more the former than the latter. I mean, I have some friends in the industry who, are involved in startups and ask me to look at their financial model and leak proof it and poke holes in it. We don't really do that as a service per se. In most cases, what we're doing is work for investors looking to put a lot of money to work, and they don't know the company well enough, they don't know the industry well enough, and they need somebody that, again, can sort of leak proof the business model and the financial model to go in and sort of rigorously look at whether the numbers make sense. It's not a large part of what we do, but we do it on occasion. And certainly when there's large transactions involved, we're going to go ahead and sharpen our pencils and make sure we like the numbers.
Right. Yes, because folks, inventors, those investors want their money back. Speaking of getting their money back, are space startups today that you're seeing offering the exit opportunities that investors want?
Well, the short answer is yes. I mean, we had a dozen companies go public last year, space companies go public in 2021. And all of them were through SPAC transactions, no regular way IPOs. But it's a good question to ask, because when that investment ramp, venture investment ramp in the industry started back in 2015, 2016, if you understand the venture investing model, most investors contribute into these funds for 10 years. So the model is you spend 1 to 2 years making your bets, initial investments. Years 2, 3, and 4, you're doing follow-on investments to scale the company. And then kind of beginning years 5, 7, 8, you're trying to get out of these investments, and God help you if you're pushing 9, 10, something went wrong. Yeah. And so if you think of the initial investments happening around 2015, by 2020, this is when guys need to start looking at exits or ramping up their investments. And so I had been pontificating for a couple of years that, hey, we're not seeing large, up round, BC rounds coming into the industry. There's a lot of initial investments that have been made, and there's been no exits. I mean, there weren't any acquisitions. Nobody was going public, no sale processes. And that's a challenge, right? Because the investors need to get their money out. And so when COVID hit, that was a, oh my goodness moment, because nobody knew what was going to happen, and the funding could have dried up, and space investment as a theme could have died forever, because people would have walked away with a belief that this was just a roach motel. You put your money in and the engineers build crap, and you can never get out. And I was wrong. I was 180 degrees wrong. The market took off for space. The investment capital just poured in, and the exits have happened. Those SPAC transactions, I think we'll probably talk about it later, haven't had the best outcome here in the near term. But bottom line for the investment community, there was a positive outcome.
Okay. In your opinion, Chris, how far are we from having a true commercial space industry?
Oh, well, in the large arc of things, that's the direction the industry is going. But the answer is highly dependent upon what sector of the industry we're talking about. So if you think of industries like satellite communications, there's a very large $25 billion a year commercial SATCOM industry. And for most of the big operators, Intelsat, SES, Eutelsat, government is maybe 20% of their revenue. In other sectors, like the Earth observation market, mostly optical satellites, it's about a 20-plus-year-old industry. But still, I'd argue about 80% of the revenues are still government. The launch industry, the satellite manufacturing industry, I mean, you look across and there's a heavy, heavy dependence on government as the primary customer. And arguably, this industry, relative to past industries, has taken a lot longer than most to make that transition. But look, it's heading in that direction over the long term. You can go back and look at, for example, the semiconductor industry. 40 years ago, 2 out of every $3 that were invested in semiconductor research were coming from the government. Today, the commercial sector outspends on R&D investment by 23 to 1. And, if this industry is going to be successful, we need to see a ratio flip. And it's not going to happen over time. Those numbers were 40 years in semiconductor. Hopefully it's not 40 or 80 years, but depending upon what happens here in the next 10, we'll kind of set the course for how quickly we see that transition.
Okay. Yeah. Since I got into this industry, I've been really big on regular people need to be buying and selling things, made in space, right? Not just government and not just big companies either. I think just regular members of the public. Well, let's hit the SPAX topic. We saw a 50% devaluation of an offer a little while ago. It was a pretty major incident. And it made me tear the rest of my hair out going, how was this initial valuation arrived at all? Who did the work? And then why was it so different when the reality came along, right? What's your opinion about SPACs, and how gun shy do you believe investors will be going forward?
Funny you should mention guns. I'll use a well-worn example. Guns don't kill people, people kill people. SPACs don't kill investors, bad SPACs kill investors. It is an investment vehicle, right? Just like options or, buying equity or convertible debt. It's the underlying asset and the valuation of that asset at the time of purchase that matters. And then look, I'm not pulling blinders over my eyes. SPACs are a pretty unique investment vehicle. And the rules around SPACs, certainly relative to a traditional IPO, are kind of shocking, right? I mean, it's almost like the industry figured out a way around the traditional SEC regulations dating back to the 1930s of putting out levels of information and guidance and whatnot that, I mean, no one would ever think of attempting to do in a regular way IPO. And just so, for people who are not as well informed, it's an important distinction, right? So technically what's happening here with the SPAC is a pool of money that was raised and it went public, and it's a public pool of money. If investors put 400 million in it and it went public, it's public as a stock with a $400 million valuation. What's called the de-SPACing process, which is the SPAC acquiring or merging with a real company, is technically an acquisition. It's not an IPO. The SPAC is already public, so it's not. So the IPO rules don't apply. And what information does any company provide when they do an acquisition? They don't have to tell you anything. I mean, unless it's material, and then there are certain things they have to disclose. So if you actually said, hey, this is an acquisition, Well, actually, they're putting a lot more information out than a normal acquisition would. So all that context is to say there are elements of a SPAC that are very positive for owners of a company in terms of speed of transaction, the visibility you can provide to investors, and there's downsides to it. I mean, some of the mechanisms of a SPAC, the lockup periods, the PIPE investment, the de-SPACing process, they create incremental risk. And look, my hands are not lily white. We, in my days at Raymond James, we can take credit for the fact of doing the very first ever space SPAC. Anybody want to guess what it was? Iridium. People forget, but it was at the time in 2009 after the market had cratered and they needed to raise capital, and we came up with an inventive way, which was doing it through a SPAC transaction. And those SPAC 1.0 were very different than what we have today in the current structure. But yeah, there are some risks around the SPACs and the trading periods and the fact that investors will hedge these with short sales that make the trading pretty dangerous. But look, here it is, bottom line, investors have, a choice whether to invest at the valuation offered or not. If enough investors rejected and said, hey, your forecasts are way too aggressive, we don't want it, the price would adjust. And we've seen that happen in some situations, prior to the final de-SPACing process. And if it was not done properly, we're seeing the after effect, which is some of these SPACs getting knocked down by pretty large percentages.
Okay. Chris, would you take a minute and describe the three paintings behind you? For those who are listening and not watching, I will link to a screenshot in the description. And if I don't, please email me, jason@goldstartech.com, and tell me I forgot to do that.
Yeah, so we moved into this new office back in April, and I had this big blank wall behind me, and I'm not a big fan of Zoom backgrounds. And so I figured I'm going to create a not virtual Zoom background. So we have a great art student here in town in high school, and I hired her to go out. I gave her some concepts, and what she did for me back here is we'll call it the past, the present, and the future.
Very nice. Very nice.
Okay.
Yeah, it's good stuff. I have hired 2 artists recently to do space stuff, and I hope their finished product looks as good as those. It's a very nervous process for me. So something that you've stated is that you believe the regulatory process or environment for space firms has become more favorable. Can you explain what's been happening and the factors contributing to this?
Yeah, so I'm not saying it's good, right? But I'm saying what we've seen is more favorable moves in terms of regulation of the environment. And, I can't give you a single overarching example. There are a number of small examples where we've seen, for example, in launch licenses. I think the FAA has done an admirable job of trying to simplify the ability of companies to get things to market. You're also seeing it with regard to the Earth observation market and some of the licensing. If folks remember back a while ago when SpaceX did its inaugural Falcon Heavy launch, they got into trouble because they didn't have a license from NOAA, which provides those licenses. And they were taking a picture of Elon's Roadster, and it captured a picture of the Earth in the background, which is technically not supposed to do that. And they've cleaned up some of those types of regulations. Look, there's a lot of work to be done, both at the practical level of commercial entities trying to get approval for activities. Digital Globe, now Maxar, launched a satellite with certain capabilities that they had in terms of new bands. And literally the satellite was on orbit for half its life before the regulators gave them the approval. But we have seen some improvements. I mean, it used to be you couldn't image anything less than 50 centimeters, and they lowered that limit, right, to the practically where the commercial industry is. So incrementally good. Some of the bigger picture stuff that we think about, moves towards the Artemis Accords and setting rules, all good. Space debris is obviously a big nut, and that's a regulatory issue, but it's a global regulatory issue that doesn't have easy answers. So there's things yet to be done, and I'm at least confident or hopeful that the progress is heading in the right direction.
Okay, well, good stuff there. Now, I want to check in with you about your impression of the defense and intelligence community and how they're reacting from your perspective to the slow emergence of a commercial space industry, right? And I know I've talked about this with Dins over in England, Ralph Dinsley, about what that de-securitizing, right, and moving it out from behind the military firewall. In your opinion, are they resisting or embracing change over here in the U.S.?
You know, I'm optimistic. I see signs that, pretty clear signs that the Defense Department realizes, that little example I gave about the semiconductor industry, where they cannot continue to drive the technology trends, that if you unleash the commercial market and, bend them to your needs, that things will be done cheaper, they will be done faster, and with greater technical abilities than you can using traditional government contracting. What are some examples of that? Well, I mean, look at an organization like DIU, the Defense Innovation Unit, which was set up by Ash Carter, the defense secretary at the time under Obama. And that was an organization established out in Silicon Valley, enemy territory, I don't know, with a half civilian, half military staff, that their entire emphasis is on embracing and pulling in the tech community to help the Defense Department solve these big problems. Certainly, we've seen it happen in some of the contracting. This is not technically defense and intel, but NASA. What does NASA build anymore? Right? They have contractors who are, in most cases, for commercial cargo, for commercial crew. You've got the CLIPS program where they're just paying fixed price to take something to the moon. I mean, that's all very different than the SLS program, which is hopefully the last of the dinosaur programs, where it's a NASA designed, actually I should say US Senate designed rocket that is being contracted and run by NASA. It's a classic, right? It's hugely over budget. It's unsupportable financially, and it's years and years behind where it was supposed to be. And you contrast that with the commercial programs under commercial cargo and commercial crew, and by all measures, they've been, tremendous successes. Let me give you a quick example on the DoD side. Look at what's happening with the Space Development Agency, the SDA, and the proliferated LEO. For those of you that aren't aware, not only SpaceX and Amazon and OneWeb are building mega constellations, the DoD is building its own 12,000, 1,200, they don't really tell us, satellite constellation. And it's a 7-layer with communications and tracking and hyperspectral, and there's going to be all sorts of capabilities built into it, including a hypersonic layer tracking, which is important. But how are they contracting? And what they're doing is, it's not a traditional program whereby every single time they order satellites, they're ordering from at least 2 vendors, could be more as they get up to the large orders. And all of the satellites are required to be compatible and interoperable amongst each other. Part of it is going to be the communications layer of the satellites, the transport layer, which is all going to be enabled by optical terminals. And every single supplier of those optical terminals, at this point, SA Photonics, Minerac, and Airbus TSAT, they have to work and be interoperable, because different companies are building satellites and putting different terminals on them. That's a pretty encouraging and a very different model than you've seen in traditional satellite contracting, where these were multi-billion dollar, 10, 20-year programs. They're buying these small satellites in tranches. Every 2 years, they're spiraling up a new capability. So Pretty cool and pretty exciting.
Yeah, yeah. Anybody who knows me knows I like modularity and interchangeable parts. So the idea of multiple manufacturers putting out a very similar product, right, is good. That is good for industry, provided that they actually work and can do what they're supposed to. But assuming that, everything is good. All right. Well, I end up talking to investors from outside the space industry every so often. Every few weeks, somebody will pull me into a call. Jason knows about these guys. Okay, thanks. And I'm frequently shocked by how little out of sector investors know about the space industry. They often know a name or two, have you heard of this momentous company, right? And that's about it. Then they're actually considering making an investment, right? That's I have to caution them down. But what are you seeing? Are you seeing out of sector venture capital more willing to fund space startups?
Yeah. So back to, let's talk about as an investment class, venture capital first. Although we have seen a resurgence of private equity investing, which is a different class of investors, and of course the public market investors coming in. On the venture side, I think prior to 2015, if I remember the numbers right, it was on average about 8 startups a year and $140 million globally in the space sector. In the last 4 or 5 years, it's been more like $1.5 billion a year and dozens of companies getting funded. And I think the breakpoint, Bryce does a good series, Bryce Space and Technology, looking at the space startup market. And if I remember, it was maybe 2016 or 2017, there were more first-time investors that year than had cumulatively invested in the industry in 10 years. What that means is, 5, 7 years ago, I knew every single VC that had invested in the space industry, like knew them personally. Yeah. Nowadays, there's people there's funds coming in I've never heard of that I didn't know they were into space, and no, they never called me beforehand. And look, I would say the part of it comes down to the venture investing model. Again, for those of you that don't live in the world of finance, venture funds, they target a certain internal rate of return that they're shooting for, and their model is to spread their bets. And if they make 10 investments, they fully expect, and statistically, these are the numbers when you run them, like 6 or 7 out of the 10 will be a 0. They'll fail. It's fine. They're okay with that. 1 or 2 will kind of return their investment and get it back. You'll get 1 in there that'll be, pretty good, 50% upside or something. But what you're really looking for is that diamond in the rough, that one, we were in Google early, we were in Facebook. And it's that one investment in the portfolio that makes the fund, period. So it's not to say they're wrong in their approach, because I would agree with you. I'm sometimes surprised by the level of knowledge of people that put 7, 8-figure sums of money into an investment that I would have said, no way, are you kidding me? And you see different behavior amongst different classes of investors. Private equity, that's not their model, and they tend to do a heck of a lot more diligence, because when they buy something, they own it. And it's funny, I spent my life working with public investors, and the thing is, I could work with a portfolio manager for 3 or 6 months talking through an idea, and he's kind of building it up with his investment committee, and he puts it in his portfolio. Something goes wrong, something goes right, or geez, just the portfolio manager changed, and boom, they blow it out overnight. And they're done with it. I mean, it's public, right? You can trade it. And so you don't have to own and live with something as long when it's public. Whereas if you're making private market investments, to get a good exit, you have to engineer the exit. So yeah, there's a lot of need for education, and knock on wood, that's what we do at Quilty Analytics. We write research on the industry. And so if you haven't looked this up, quiltyanalytics.com, and see what we do.
Right. Now, I was going to finish up here, Chris, with who would you like to hear from? Who should be reaching out and talking to you, and what kind of things would you like to do for them?
Well, what I would say is we get a lot of inbound interest, and especially after events like this, for regulatory reasons, because we do work in the financial services industry on investment banking transactions and other things, we're sort of limited to an institutional accredited or corporate type clients. I have tons of kids at universities and whatnot that want to reach out and talk about stuff. And, sometimes we've got time for that. A lot of times we don't, but, we have to be very careful because the information we use is sometimes it falls under different regulatory schemes. So as much as I love the fandom of having individual investors signing up, in most cases, we just can't. So, but we put out free stuff and there's some stuff on the website, and certainly great webcasts like this where you can jump on and hear from us.
Yes, and get a little more depth, which is what I'm always aiming for. Well, Chris, thanks a lot for doing this. I'll link to Quilty Analytics below.
Thank you. Appreciate it.
So a great look at the state of space, commercial space industry right now with Chris Quilty there. If you are a founder or a senior executive at a space or defense company and you're realizing, holy cow, we're getting to the point where we're growing and you're realizing, look, we don't have the systems and processes in place to handle things. There was a sort of a tribal knowledge that would get passed around by people talking to one another. And you realize you're exceeding that now and things are breaking and things are falling in the cracks. This is a very important time to talk to us at Cold Star Technologies. This is what we do. We help space and defense contractors get those systems and processes in place. Think about the electrician or the plumber inside your house, right? Very, very important systems. If those things aren't in place, you're going to have a bad time. So if you want to get on with concentrating on things like, strategy or execution, right, R&D, then you need these systems and processes in place. Go to coldstartech.com and book a time to speak with me. Thanks for listening.